Ladies and gentlemen, this day truly is very special for reasons more than one, and we have a very special gentleman who's here with us today, and it is indeed an honor for me to be inviting him up on the stage for the keynote address. Our keynote speaker is here, and please allow me a moment to give you a brief introduction about him before I invite him up to the stage. Ladies and gentlemen, I would now like to invite on stage in just a bit Sri Ananta Barua to offer his guidance on how we can grow. Sri Ananta Barua was appointed by the central government as whole-time member of Securities and Exchange Board of India in Mumbai on the August 1st, 2018. He looks after the Department of Debt and Hybrid Securities, Investment Management Department, Market Regulation Department, Market Intermediaries Regulation and Supervision Department, Information Department, Investigation Department, Legal Affairs Department, Inquiry and Education Department, Board Cell and Parliament Affairs Cell. Prior to this position, Sri Barua served as an executive director from May 2010 to July 2018 in SEBI. Sri Barua is a commerce graduate with LLB, both from the University of Delhi. Ladies and gentlemen, he was on deputation to Central Bank of Bahrain as advisor from 2004 to 2006. He joined SEBI in 1992. It is indeed a privilege to have him up here, but before I invite him on stage, may I please request Mr. Khatri to join us on stage. Mr. Khatri will be taking this opportunity to welcome our keynote speaker here. Mr. Khatri, please join us. Ladies and gentlemen, please put your hands together for none other than the very dynamic Sri Ananta Barua. Ladies and gentlemen, please put your hands together as we welcome Sri Ananta Barua here at the Confluence.
Good evening, everyone. Actually, when I was in charge of mutual fund department in 2010, actually that time we came out with a paper. Our chairman was Mr. U.K. Sinha. And then at the time, the AUM was about, I think, 8 lakh crore and all. We had a one vision paper we brought ki by 2020, we will achieve 20 lakh crore. But we have surpassed that one, and it was more than, I think, 24 lakh crore and all. I do not know this target of 100 crore. That was, I think. And one thing I always tell whenever I go to any seminar, especially with respect to any product, financial products and all. And then I always reiterate how this product is, the mutual fund, how it is different from the other product. And that is one thing. Then we have also no risk management, then supervisory and other things. Those I will not touch. So, but brief thing I will tell why this is one of the view that why we are able to achieve this target more than 40 lakh crore, or we have seen folios more than 12 crore, and why it was a success story, even though we have miles to go. And this is one of the product. No, if you see, you have a deposit and other thing. No, people are lured and all, insurance product and all. And the beauty of this product is a very transparent product, and you get so much information that it is in a way more than sunlight. And there are 2-3 basic features are there. And then globally there was an issue whether how to when there are other products are being regulated, especially out of the financial market, and there was a view was taken whether the product which is in other countries, there was some run in money market mutual funds in some countries and all. We call it breaking the buck and all. $1, this has happened. But in India is one of the country where we have not allowed any assured return scheme. That is one. No fixed return. All are subject to market risk. That is the product. And then the investors is benefited on that, whether there is a profit or loss, he gets the profit. It doesn't go to any bank or any insurance company, and all the investors take all the risk. And here there is a daily disclosure of NAV and TAR. You will not find anywhere. Okay, daily it is disclosed. Then the whole portfolio is disclosed. You know where a mutual fund has invested. Suppose, take the example of a bank. They lent, and then you will come to know if anything has gone bad after 3 months. Okay, there is an NPA. But here, the monthly disclosure of portfolio, in case of debt, it is 15 days. You know whether any mutual fund which is invested, if there is any downgrade, what is the percentage of paper which has been downgraded? You can make out and you can see the impact which may have. And then AUM and other things also are disclosed. Then one more thing is the performance of all schemes. And especially, scheme returns are benchmarked to total return index. That has to be disclosed. Then even the commission has to be disclosed, how much commissions has been paid. And in other product, suppose you are buying an insurance product and all, so you may not know how much commission, and I will tell you, if you see the figure, it will be mind-boggling. But but mutual fund is the lowest. Then we have other disclosures like scheme-wise annual report and all. I'm not going into one of the challenges, because here is, even though there is no assured return scheme, but here open-ended scheme, they provide daily liquidity, means you can redeem any time. And this is one of the challenge, and therefore what happens, they need to have a sufficient liquid assets. And we have seen by and large, the AMCs, they have been able to meet that requirement. Only in some few cases, there were some issues, especially during COVID and other things, but by and large, what happens, all open-ended debt schemes, we have provided that minimum 10% there has to be liquid assets they have to maintain to meet that redemptions. And then there has to be a stress testing of those assets. And we have seen that liquid, even though it is 10%, normally AMCs may keep up to 18% and all. That is one. And other thing, which I said, in Indian mutual fund, we do not allow any assured return scheme. And second thing is, there is no leverage allowed. Okay, you borrow and then you spend that money and to generate more return. Here, borrowing is limited only, suppose you have some redemption pressures and all, so only limited leverage is allowed. That is for only meeting redemption requests and other thing. Therefore, this risk management system are as such that all AMCs, they have to keep in mind all and address all type of risk, whether it's a liquidity risk, concentration risk, and there is also prudential norms regarding investment in a sector or in a specific company or group entity. So those norms are there, so that there is no unnecessary concentrations in few scripts or few industry and other things. The topic today is on passive. This is a passive conference. And in India, the first passive, which was ETFs, which was allowed, which was started was, I think, in 2001. And we have seen that till 2015, there was not much traction in this. And in 2015, we have seen the EPFO, they came to invest. Actually, this was the product earlier, any, especially EPFO and others, they were not touching. And they were mainly investing in GSEC and all. And in 2015, the first time, they started investing in equities through ETF. And and from 2015 and onwards, we have seen there is a gradual increase, and they invest up to, I think, 15% of their corpus in ETFs and other, mainly ETFs they are investing. And recently we have seen, especially their percentage earlier was 50% of total passive investment. And in the last 1 year, we have seen their contribution has come down. The more retail and others are investing in this product. Especially contributions of EPFO in fresh inflows in financial year 2022 was lower at 39% of total ETF inflows, and total passive was only 25%. Earlier, this figure was 50 and 39%. The non-EPFO growth is driven by mainly corporates, retail and HNIs. Retail and HNIs account about 7% of total AUM. And we know that the total AUM of Indian passive ETF index funds is about 5,83,000 lakh crores as on 31st August 2025. And there is an interesting point is that index funds have started growing faster than ETF in the last 12 months, thus indicating increasing participation of retail investors. And the passive investment shares in overall mutual fund AUM has increased from 3.8% in March 2018 to 14.9% in August 2022. Globally, the market share of ETF as a percentage of mutual fund industry is about 14.5% as on Q1 of 2022. That means we have, except USA, we have broken the global benchmark. And there is also number of increase in number of portfolio which we have seen about 1.1 crore, 1.8 crore new folios has been created in ETF and index fund in the first 5 months of financial year 2000, this financial year. And I don't want to go into the details. And we have seen that overall we have a passive products available on 51 unique equity indices and 35 debt indices. We have also have ETF index funds available in 9 global indices investing in global stocks. However, Nifty 50 Sensex and Nifty Bharat Bond index series account for about 65% of the AUM of ETF index funds. The average trading volumes of ETF at NSE have increased to rupees 450 crore per day in the current financial year from 352 crore per day financial year 22 and rupees 207 crores per day in financial year 20. While the trading volumes have been increasing but still continues to be low. And always we see there are 2-3 challenges which have, one is low trading volumes, and the retail's participation continues to be at below 7%. And then AUM is concentrated in few indices. And therefore, always in these conferences, last year also, we received a feedback. And 2-3 feedback was there that you need to incentivize market makers and launch of liquidity enhancement scheme. There are no for exchanges, they, in some scripts, especially in F1 and others, no, they come out with some scheme for enhancing liquidity. And then encouraging large investors to buy the ETF through the exchanges rather than buying it directly from the mutual fund. Then another thing was that there should be focus on investor educations. I think this seminar will also is will be helping on that. And SEBI has come out with a new framework for especially passive, and we have issued a circular on 23rd May 2022. And this is particularly is to address those things, which I've highlighted. I will go to one by one so that the industry may be knowing, but how it is in a way you understand what the new framework has been achieved. Here, the mutual fund and AMCs, they can come out a scheme for investing in India ICS, which are not bespoke or which should be broad-based. And then the MFIN, they come out with all the India ICS like of many rating agencies and other things. Then they take approval on that, whether it is debt or equity, the ETF can be launched. SEBI has mandated each AMCs to appoint at least 2 market makers who are members of the stock exchanges for ETF to provide continuous liquidity on the stock exchanges. When it is listed, then what happens? You don't get any investors in the other side. Here there will be market maker who will be ready to buy the units of those listed, and they will provide two-way quote. In order to make the market making process less capital intensive, net settlement between the cash leg of transactions in the units of ETF by the market maker and consequent transactions in underlying baskets by the ETF will be allowed. Market makers have been permitted to transact in the basket of securities underlying the ETF against equivalent transactions in the units of ETF and transfer the net obligations of the such transactions to the ETF for the unit creations for redemptions. As market maker, the broker, they will be, suppose there is any request from the investor has come for redemptions, then here, even though there is some restrictions, earlier you cannot go to the AMCs for redeeming that one, but the market makers has been allowed. So they can go and redeem, and by that time, if there is any, based on the net settlement, otherwise, first you have to give money and all. But here, because it will be same clearing corporations, so they have been given some leverage on the, if there is any for netting in the 2 transactions which will be taking place. The AMC shall create or redeem units of ETF without upfront payment of 100% value of such units or upfront delivery of such units by the market maker, respectively. And second thing is to announce liquidity for ETF. In order to ensure liquidity on exchanges, threshold of rupees 25 crore has been prescribed. Earlier, what was happening, people were not transacting in the stock exchanges. Now, if, and they were going to the AMCs for redemption and all. Now, if it is only above 25 crore, only then you can go directly to the AMC. Otherwise, up to 25, you have to go to the exchange for trading. It has been prescribed that below which all transactions by investors, except the market maker, has to be extended on a stock exchange platform and increase the threshold for direct unit creations through the mutual fund to rupees 25 crore. Investors can directly approach the AMC for redemptions of units of ETFs for transactions up to 25 crore without any exit load in case the traded price, closing price of the ETF unit is at discount of more than 1% to the day-end NAV for 7 continuous trading days. And we have seen there is a, in case of mutual fund, there is a interval schemes are there. Even though it is close-ended schemes, but in some intervals, no, they provide liquidity. The similar thing has been prescribed. Investors in general cannot approach to AMCs in order to subscribe or redeem units of ETFs. Investors only has the option to trade units in ETF on the exchange, even if it is at a loss as compared to NAV. In order to address this issue, concept of liquidity window has been provided. When the window opens, investors can directly approach the AMC for redemptions units without any exit load. This is a new thing which has been allowed. So there will be liquidity window, even though it is listed in the exchange, and there will be even the market makers are there, even if suppose they are not able to liquidate their holdings, there will be liquidity, there they will go. And one of the feature of this is that there is a lot of transparency as far as as compared to index fund. And under this scheme, even ELSS, passive fund category, has been allowed. As we know, ELSS, there is no tax exemptions, other things are provided. So here, the AMCs can also have a ETF on ELSS. And SEBI has also provided a lowering of minimum subscriptions for NFO and other things. And in order to make ETF index funds more cost effective, the mandatory deduction towards investor education's awareness from the scheme has been reduced from the existing 2 bips to 1 bips. AMCs and MFIs shall carry out the focused investor educations and awareness initiatives for passive fund. And recently, SEBI came out with a board-approved regulations where, the units of mutual fund has been included for the purpose of insider trading. And if any employees of the AMCs, they have to take a prior permissions. But the good news is that the overnight index fund and ETF has been given exemption from pre-clearance and reporting requirement. If the employees, they invest like in SIP or ETFs and index funds, then there is no need of pre-clearance and investing and this limit. This is all I wanted to speak, and thank you, all of you.